What up, dummies? Welcome back to my channel. If you are brand new, thank you for stopping by. Seriously, it means the world to me. Make sure you click that subscribe button and click the bell button to get notified every single time I drop a video. And today you obviously came here because you want to see my reaction to another video that I'm going to react to today. So just give you a quick synopsis. This video is going to be evolved around the stock Palantir. It's got a huge fan base behind it. I'm not a fan of the company, and this video that I'm about to review, called "These Are the Palantir Earnings You Need to Know" by Everything Money. Now, just to give you a quick history on Everything Money. It used to be a really cool YouTube channel I used to watch consistently. I actually used to enjoy it quite a bit. Every time they dropped a video, I was super excited. We used to be three guys. It was the humble, kind of jolly guy named Seth. He had his long beard, and he was basically the retail investor, the brand new guys, the baby of the group, the one who's just brand new to investing and trading. So every time people dropped a video, he got really excited, and it's like he was learning something. So he kind of reminded us of us. You know, he was a character that reminded everybody of us, right? And then you have Paul, which kind of gives you off this Gary V vibe, you know, speaks really fast, really smart, sometimes comes across arrogant, but overall he's the Gary V of the group. And then you have Mo, which is like the day trader, which doesn't really fit in their whole narrative of what they're trying to push, which is value investing. Anyways, they got Mo, and he comes across like kind of like this scammy car salesman, right? Well, now they fired Seth, so Seth is no longer on the show, unfortunately, and I feel like it lost its heart. So now you just have like two kind of unlikable characters. You like Paul, but it's like a hit or miss, you know, because sometimes he comes across really arrogant, and he knows his stuff, right? He definitely does. But Mo is really not good at, I guess, being relatable to his audience, because he legit, I've seen multiple episodes where he insults the audience before he even gets into explaining the trade, and I'm just like, wow, where are you getting your lessons from?
Most of you should have never been born. You should have rolled down the inside of your fat mama's leg.
Like, basically imagine like if I'm teaching you something, I'm like, you don't know this, but I do. It was kind of like, I'm pretty sure he actually said that once. But anyways, they lost, I feel like, the big crucial part in what made them what they were, which was a trio. It was three of them. It made sense. Now it feels different. It just definitely feels different. And yeah, I just don't follow them as much. So anyways, let's get back into it. We haven't started yet. Let's get into the reaction to "These Are the Palantir Earnings You Need to Know." I do know that they were not a fan of Palantir. So let's see what they got to say.
Palantir just reported this morning, guys. Now, if you've watched our channel, Palantir is kind of an interesting one, because over a year ago, there's a YouTuber out there who knows nothing about finance and money, and he kept talking about Palantir being amazing at $40 a share.
I wonder who they're talking about. And there's several YouTubers that love Palantir. It's actually two of them I interviewed, and one of them has over 250,000 subscribers. So I wonder who he's talking about, or is he maybe talking about someone else? I don't know. But I'm curious. If you guys happen to know, comment below. Let us know, because they used to call out people all the time. They don't do it anymore.
Share, and I said, you're wrong. Palantir is not good at $40 a share. Guys, the way I look at investments.
Just so you guys know, I was on that boat. I was like, anybody who's buying Palantir at 40, you're nuts.
It's the present value of all future cash flow. Right, Mo?
Absolutely.
Okay, so the future value of all the cash flow, paying $40 a share for Palantir, did not make sense to me. And I, at the time, said like $5 a share. Well, it's currently in the $7 range. $7.78 as of right now. It's down about 2% today. They just reported earnings. They lost 6 cents per share versus an expected 5 cents per share. Okay, they reported $477.9 million in revenue versus $474.7 expected. U.S. revenue is up 31%. U.S. commercial revenue is up 53%, and that's what Mo loves.
That's the number I like. I like that they have more. They're relying more on that. Actually, well, let's see what his title is actually. But he basically said they're using the government to get them going, and then this commercial side is going to really escalate them.
Yeah, that is actually true. Unfortunately, I still think a majority of their income is still coming from the government. So if I'm wrong, fact check me. but I'm pretty sure a majority of their money is still coming from the government contracts. But I do know they're trying to pivot away from that and go commercial.
Yeah, so Palantir, basically their goal they're basically using your data to solve problems. I know that sounds generic, but they're all big into data, right? They said recently that they are involved in everything that's going on in Europe. They wouldn't get very specific, but they're helping a lot of governments with what's going on in Europe to take the data, analyze it, and come up with the solutions they need.
See how he seems a little confused? I'm trying to explain what Palantir does. That's a problem with Palantir. Like, I actually know what they do for the government. Can't talk about it publicly. And it's really hard to find people who actually worked with the software or worked around the software or in the space, because a lot of them have to sign an NDA, especially if you utilize the software. It's an awesome software, by the way. It does a great job. I think sometimes people overhype it a little bit. They act like this is like some amazing software is going to destroy Microsoft and destroy all these other companies. It's not. It's really not. They're good at what they do, but it's not this massive revolutionary software that other companies cannot replicate. At least from my experience on the government side of things. It does a very good job, though. Like no lie, it's an amazing software. But it's just funny. Like he has a hard time explaining exactly what they do, and that's the part that I don't think a lot of investors are thinking about. Like, why are you investing into something that you don't really know what it exactly does, or you think you know what they do? Because again, as Carpy talks about what they kind of do and how they help and all this other stuff. But there's two sides to every single coin, and but listen, there's a huge fan base behind it. I don't know why it took off like this, but huge fan base of it. And again, I'm also sitting here not really explaining what it does. Let's just say it does a really good job tracking.
U.S. government revenue is still up 23%, even 53% increase. Now,
That's great.
some of the benefits of Palantir that I like. It's the 8th quarter in a row of free cash flow, positive free cash flow.
They finally
That's
liking
not
it.
something
Okay.
we were talking about a while ago.
Yes. I mean, granted, last year was still 2 or 3 quarters in a row, but this is the thing for me. Like, if I don't understand how the company is going to make money, I can't understand how they're going to lose money. But now that we're seeing the glimmers of hope, yes, they still, on an earnings basis, lost money per share, but free cash flow has been positive for 8 quarters in a row. Mo, you ready for this one?
I'm curious in why they keep talking about the free cash flow now. Like you said, it's been like that for 8 quarters, but 7 quarters ago you didn't like it. 5 quarters ago you didn't like it. 3 quarters ago you didn't like it. Last quarter you didn't like it. So I'm curious, like, what really changed your mind?
Yeah.
They have $2.4 billion in cash and 0 debt.
That's incredible.
It's very, very difficult to go broke when you have 0 debt and $2.4 billion in cash.
And I agree that is literally the only positive thing I see about Palantir, to be honest. But I feel like they were also debt-free last quarter and the quarter before that as well. So I could get my numbers wrong, but this is... I'm serious. I'm still trying to figure out what changed your mind.
And their revenue is about $2 billion a year, right? I think they're expecting next year $1.9 billion or 1.9 for the year.
1.9 for the year. Yeah.
Guys, they have $2.4 billion in cash. So now that Palantir has fallen a lot, I'm getting very, very interested in this company. Now, I do believe that the NASDAQ and the S&P is overpriced. Here's my stock market to GDP ratio. I have it as 58% overpriced going back to 1929, which is expecting not a good return in the future. So am I trying to time the market? Maybe. I have sold puts on Palantir at a lower price than today. And I will continue to probably sell as long as this thesis keeps going. And what's my thesis? They're going to keep very low debt levels with very high cash on hand, and their free cash flow is going to continue to get better, and their earnings will continue to get better.
My hope is that they stay on that path and not at some point say, okay, let's take on tons and tons of debt and kind of go grow this thing. I hope that doesn't happen.
I don't think that's going to happen because, a lot of tech companies keep very, very low debt levels. They're able to generate really high margins. So the question is, why take on debt? Like, why are you going to take on debt if you have
especially in this environment of interest rates?
Yeah. And
so
then
this is almost like a deterrent.
Yeah, I would agree. I know Apple takes on debt quite often. They don't need to, but they have in the past. And previously, before all these interest rates, a lot of companies did take on, debt because it's good debt. There's good debt and there's bad debt. If you take debt now, I would see more as like bad debt. because the interest rates are so high. So it just doesn't make sense for me, especially if you have a massive cash flow.
It's not free money anymore.
Correct. You know, when you're borrowing at 3% or 2% for 5-10 years, okay, I can understand it.
Right.
But I look at this thing to myself, okay, so let's look at Palantir using our 8-pillar process, because it's something that I really want
That's
to
what I used to like about
check out. So here's our 8-pillar.
everything money they have. Like this little algorithm system. It's the 8th pillar. This stuff is basically free. I heard that Strongman Personal Finance actually took their software and like, well, he didn't take their software, but their software is just like basic algorithms and stuff. I think he just took it and made a free Excel spreadsheet that does the exact same thing for people for free. So check out Strongman Personal Finance.
Not enough data. All right. We like to have data going back 5 years for our 8-pillar process.
He's like, we don't have enough data. That is true. Like literally, I called out some levels on Palantir below 650. I don't know where the price could go from there. You know, really, it's just at that point, it's just a guess. Could it go to $3? Maybe. Could it go to $4? Maybe. Could it go to $1? Maybe. I don't know.
So here it is going back the last 3 full years. 900 million, 1.3 billion, 1.74 billion in revenue. The only issue I have here, look at these shares outstanding. Yeah. The shares outstanding are increasing a lot, but now that they're free cash flow positive,
maybe they stop.
Hopefully this starts to go back to the way, you know, they're really growing the revenue. I mean, guys,
the diluted
US
investors.
revenue total up 31%. I mean, this is like, okay, this has a lot of potential, and data is the future. I keep hearing people say this. The data is the new commodity, right? Now, whether that's true or not, it's a cute thing to say, etc. But Palantir has been around since 2003, created by one of the smartest men out there, Peter Thiel. He's the one that created PayPal. He was partners with Elon Musk. Love the guy. Brilliant man, libertarian, was 1 point shy of becoming a chess master. I think I looked him up and it was like $21.99. And all you have to do is get to $2,200 to become a chess master. So why he stopped, I don't know. But I look at this company and
to make
I
money?
want to look at this, at the analyst estimates. I mean, guys, they're expected to make 6 cents this year, according to 18 analysts, and $1.60 in 2026. So let's say in 2026, they do hit this. And this is analyst estimates. You assign 20 times. And the reason 20, it's still gonna be a fast growing business then. This is a company that could be justifying $32 a share. Now, do you understand why I don't believe in $40 a share for Palantir? Remember, I'm not for or against many companies.
I agree with that. And that's like the argument I have with a lot of people who like Palantir. I don't think it's going to like 10x in the next 5 to 10 years. I think that the stock is probably valued at a good price around the $10 to $12 range. That's just me. But what he's saying right there, yeah, basically 20x, it's $32. I don't think it's going to reach that all-time high where it was, like a year ago, over 40, I believe it was. It's going to be rough to get it back up there. Really, like I truly believe that. You have a lot of competition coming. They do.
I'm for or against the valuation. Now, look at a company like Peloton, who that financial moron also talked about. Peloton, I could never come up with a value for. I didn't know when they were going to make money, how it was going to happen.
I'm really curious who this financial moron is. Y'all got to comment below. Because literally, there's a lot of people talk about Peloton. There's a lot of people talk about Palantir. So I'm curious.
Couldn't get it, so it was too difficult for me. It went from 180 down to 9. It's at $9 now. Guess what I think?
I still don't know if I could pay $9 for it.
I don't know how to. Yeah, so I just avoid it completely. But with Palantir, I see this path to profitability. Look at this revenue growth here.
That's incredible.
Well, yeah, revenue growth of mid-20s% for 5 years. So let's go in here and use our stock analyzer tool to look at it and say, okay, now I'm going to ask Mo here to give me his assumptions. And we use the stock analyzer tool to see a future value for the business. It just basically is a model. What you put in is what you're going to get out. So if you put in garbage, you're going to get garbage out. My goal is to make 3 assumptions: a conservative one that's the middle, kind of what I think is going to happen, and one is the high one. I tend to follow analyst estimates for the high
guys,
one.
they do a really good job
That's what I tend to do.
promoting their software. They always use it during every episode. And they're kind of trying to get you to actually sign up and utilize that software. Again, there's a lot of websites and apps that kind of do the same thing, to be honest. It's not my favorite one. I haven't tried it personally. I thought about it. And that's actually one of the reasons why I liked them initially. is because they weren't pushing some course or anything, but they do have Mo's trading course, which is expensive. I haven't heard anything good about it, so I don't know if it's reliable or not. Like I said, he doesn't strike me as a very reliable trader personally, but I don't know. As for the software, that's why I liked them. I was like, they're just pitching a software. At least they're pitching something that you can actually utilize to help you become a better investor versus all these other people. So let's see.
It's a very low number, but remember, they're not at cash flow. They're not at earnings profitability yet,
Right.
so it's going to take some time.
15, 18, 21.
See, I think that's low, Mo.
Oh, really?
Yeah, I do.
15, 20, 25?
I was actually going to say 15, 22 and a half, and 30.
Wow. Okay.
Because
try
Mo,
it.
look at it this way. Are they going to have 47% of their revenue being overhead? Probably not.
No,
And that's
not
what I
for
think
software.
here. Now, I think their overall, I think in year 10, their bottom line margin will be higher than this.
Okay.
But along the way, it's going to have lower margins to go up.
Okay.
That's why I think that.
Okay.
All right, free cash flow margin.
Should we make it? Actually, they do have free cash flow now.
They do.
He didn't push back at all. I was like, okay. I don't think he knows much.
But I think it'll all equate out over time.
Yeah. Okay. Make it the same.
I agree
Just
with
because
that.
we're doing 10 years.
All right, now PE and price of free cash flow. Now remember, guys, this asks you for what's the PE going to be in 10 years. It's still going to be a company that's growing, but let's say it does 22.5% revenue growth for 10 years.
Okay.
It's going to do what? Let's call it $2 billion today. That makes it a $14.6 billion revenue business in 10 years, which isn't some insane number.
Reasonable.
Yeah, it's reasonable.
It is.
So does it still have growth potential from there?
I don't know.
I would think so. But again, give me your PE assumptions, Mo, for 10 years from now.
15, 17, 19.
I like it.
Same for price to free cash flow.
Yep. And your desired annual return. Now, guys,
Now for me, I'm going a little higher on this one.
so that I agree with Mo. Your desired return is essentially your margin of safety. What return do you want for these assumptions? Now, the higher your assumptions, the higher your desired return should be. Now, we've already been conservative here. So I think our desired return should be lower here. However, this is still a young company. It still has a lot of things to get through.
Remember, guys, so when you're watching this and they do their little 8 pillars, a lot of that calculation at the bottom, what they're doing right now, it's just they're guessing. All right, they're guessing what they believe the company will look like in the future. So they can be completely wrong or they could be right. So I know Paul likes to be very conservative. I'm curious to see what the calculations are going to be.
Right? So, Mo, what is your desired return numbers?
I'm going to go 16, 18, and 20.
Wow. Okay. I like it. I would have done
I would have done
15. It's basically the same thing.
Yeah.
I
So
would
the
have done
stock is currently at
13,
$7.78.
16, 18.
Now, whatever these numbers come in at, if it's all green, it doesn't mean go out and buy. It means go do more research and make sure all of these assumptions are reasonable assumptions. Guys, if
I think the price might actually come in where it's currently at. Let's see. It might be at the $6 range.
it's all green, the goal is to sit there and say, if I had 100 opportunities to buy companies like Palantir with this future, this valuation, would I do it? Now, remember, they have no debt. They have $2.4 billion in net cash. That has to be factored in there as well, because this stock analyzer tool does not factor in the balance sheet.
Yeah.
So, analyze button,
I'm excited
Okay.
to see this.
a low of 276, a high of 850, a mid price of 5.
Okay.
Okay, so what this means
Well, I did say I think that Palantir is going to go to the 5s, between 5 and 6. The $2 range, man, that's like ultra conservative. That'd be crazy if it does hit that $2 range. At that point, like you might as well buy a couple hundred shares. I mean, that's super cheap, and just that's a gamble. That would just be a gamble, in my personal opinion.
is if your highest assumptions are true, you should pay about $8.50 per share, and you're going to get about a 20% return if everything turns out to be true that we assumed above. On the low side, but I think the low side's very conservative. Middle side, guess what? Spoiler alert. This is about where my puts are sold at.
Yeah.
And I said back in the day at $48 a share that I'd be interested around $5.
Yeah.
And I'm not saying that it's just going to always change, but here is where I stand. So if you like this and this makes sense to you and you're a new watcher, do me one favor. I just need you to subscribe to the channel.
All right, that was it. I agree with him. The $5 range is more of a realistic price point. So we'll see. It's just funny that they completely changed their tone on Palantir. I don't know if they're trying to get like the Palantir fans to go over there or what. Because again, I'm pretty sure they had free cash flow. I'll pull it up, but I got things to do here shortly, and I got to bounce. But yeah, I'm pretty sure they had free cash flow the past couple of earnings, and were debt free as well. But they're still missing some really huge red flags. I still think they're paying their employees and their stock compensation a little bit too much. I think they diluted the company too much. And so we'll see, but they may buy back their earnings, you know, and especially since they have free cash flow. Imagine if they end up doing like a dividend or something. That literally would change the game for Palantir. It really would. Will they do that? I don't know. Who knows? I'm waiting for Google to do the same because I think if Google ends up doing some sort of dividend, oh boy, Google's going to skyrocket like crazy. But that's it, y'all. What do you guys think of everything money? I guess this wasn't as bad as I thought it was going to be. I thought I was going to trash them or something. But no. I mean, for the most part, I agree with the pros on Palantir. I agree with the price that they were estimating at, which is $5 and some change, which is literally where I would recommend people wait if you're not planning on trading it. I'm planning on trading it, so that's a little different. I should have probably honestly done a put as well, or no, cash secure put. That's what I should have done. I'm assuming that's what he's talking about. He's got a cash secure put sitting at the fives. I don't think he just has a naked put. So we'll see. Until next time, y'all, my name is Mark. I see you guys in the next video. Peace out.